What if I told you there's a stock today that feels exactly like Netflix did back in 2010? A small company with a big idea, underestimated by the market, yet slowly building an empire in plain sight. This isn't a hype play, it's a real business with growing revenue, a visionary founder, and a niche that's exploding. That company is Hims & Hers Health, ticker HIMS. And if you missed Netflix back then, you may want to pay attention now. Let's dive in. HIMS started in 2017 with a bold mission to make healthcare more accessible, especially for things people often feel too awkward to talk about, like hair loss, mental health, and sexual wellness. It's a direct-to-consumer telehealth platform that lets people get treatment online, discreetly and affordably. From doctor consultations to delivery, everything happens through your phone. The genius here is not just the products, it's how HIMS is owning the consumer healthcare experience, just like Netflix changed how we consume entertainment. Where traditional healthcare is slow, confusing, and expensive, HIMS is fast, simple, and affordable. Back in the early 2010s, Netflix wasn't a giant yet. It was just starting to pivot from DVDs to streaming. Analysts doubted it. The stock was cheap, but a few believers saw the long game. Fast forward and we know how that story ends. HIMS stock today trades at a valuation that doesn't reflect what it's building. Like Netflix back then, it's quietly expanding its reach, improving margins, and stacking recurring revenue. Its subscription-based model is sticky. Once someone signs up, they tend to stay. Over 90% of HIMS revenue comes from subscriptions. That's powerful. And while Wall Street sleeps on it, user growth, brand recognition, and product expansion are climbing. Here's where it gets interesting. Revenue has grown from $83 million in 2020 to over $870 million projected this year. Gross margins up from 70% to nearly 80%. They've hit positive EBITDA ahead of schedule, a big milestone for a growth company. They're not just growing, they're scaling profitably. And unlike many other growth stocks, HIMS is not burning cash endlessly. It's one of the rare profitable digital health stocks in the market today. And that's not something investors should ignore. Here's the bigger picture. The US healthcare market is worth over $4 trillion, and digital health is expected to exceed $500 billion by 2030. HIMS is positioned at the sweet spot, consumer-facing, trusted, and tech-powered. Their brand is strong with Millennials and Gen Z, and as these generations age, they'll drive long-term demand. They're not just a telehealth startup. They're a modern health platform, expanding into skincare, weight loss, mental health, and hormone therapy. Think about it. Amazon started with books. Netflix started with DVDs. HIMS started with hair loss. Now, let's be honest, there are risks. The company still operates in a competitive space. Regulatory changes could impact how telehealth works. And if customer acquisition costs spike, that could hurt margins. But remember, the same doubts were thrown at Netflix, Amazon, and Tesla. HIMS is investing heavily in tech, logistics, and brand, building moats that make it harder for new players to compete. And that's why early investors might be looking at a generational opportunity, not just a short-term play. So is HIMS stock the next Netflix? No one can predict the future, but all the ingredients are there. Visionary leadership, strong growth, real revenue, and a massive market. If you missed out on Netflix, Tesla, or Shopify in their early years, maybe don't sleep on HIMS. Start researching, start watching, and maybe start positioning. If you found value in this video, hit that like button, subscribe, and turn on the bell so you never miss updates like this one. Thanks for watching. See you in the next one.